Hi folks. Now this is the video that follow up with my previous post. As I mentioned that I would like to develop a simulator that to demonstrate how persistent investment over time can potentially give us more stability and more prosperity in wealthy development. Well, I have to admit this is my own personal project. I try to figure out how to become one day financially independent. So it is still a testing stage, but I can't wait to show you. I have drafted something a little bit like paper, but in this video, we were going to expect have these type output and some of charts and some tables, and I have written this these Python and R scripts, and I will show you later on. First of all, remove all these existing data, so it will be empty here. So this is the main pipeline, right? And this is the main script where it connects all these individual scripts here. It includes the data fetcher, which I use the Yahoo open source API. And then once I got those historical data at firm level, and it should be daily price level, then I will input or feed those data into the simulator. It contains some of these key algorithms about my investment strategy. And if you're interested, you can read these technical report in detail. But yeah, most of them are quite common sense, and most of the calculations are also very standardized. So I'll leave that for you to read. Right, so let's just give a quick demo. And as I said, to make this process as entertaining as possible, I will let the music to fade in so that you wouldn't feel too bored about it. Now, as you can see, the first step is to crawl the data from Yahoo Finance. As you can see, this is the real-time output. For example, for Apple company, it tracked back to 1980s until very recent. Yep. So once the data has been fetched, the next stage is to run the simulations. Let's give it a little bit of time. Okay, now it starts to processing very quick. As you can see, this is the power of automation. A lot of things can be done in a matter of seconds. So this is the present days, and this gives you the beautiful output, which I think is quite interesting. Now, that's all. That's finished. And as you can see, there are lots of, I think, interesting data. So if you look at this, as we showed in your previous short video, it gives me the idea of what if I insist on making investment on the fortnightly basis. Let's say put $1,000 every 2 weeks, and I start with $100,000 on hand. How would this lead to me in a matter of a few years time? And I can look at the individual stock level. So yeah, I hope this gives you an interesting insight on how we can plan our investment strategy and how this will lead to a different investment outcome. Okay, I forgot to mention about what company I chose and why I have included different time periods. So over here, I think I've chosen around 15 different companies. So I included some New Zealand company, energy company, telecommunication companies, some Australia companies, and of course those mega companies from the American, those big names, and also use the benchmark, the Vanguard and the Triple Q trust funds as a reference to demonstrate how different options in your portfolio can compare with the benchmark performance. Now, I also add a little bit a flavor in testing these type of simulator. Is by timing difference. So use the same investment strategy, same time range, so same time period, but we put into different, different settings. I have the pre-COVID time. I have the 2008 pre-GFC times. We have the first Trump administration times where there's a lot of uncertainties and hypes in the market. So all these strategy has been set in here with some key parameters and the different time periods. You can play around. You can extend the time period. You can change all those key parameters to see what different scenarios can give you different results. But I think it's fun to play around. I want to just use these different timings to demonstrate how all those different timings can still demonstrate the power of persistent investment. All right, this is the end of the video. Now, if you have questions about why I am doing this, I want to be honest with you. I play with my real money, and I also want to be very, very upfront that I did some terrible mistakes. My performance wasn't that much good. I chose some not good options in terms of companies which I thought has been reliable and stable. But it's all about experimenting different strategies. I think doing this can be fun, let's say risk-free if you just play around the simulator. But if you put your real money inside, you need to be careful because our emotion will always stay in the way of our decision-making process. Okay, I will stop talking and thanks for watching. Ciao.